What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 dividend stocks that I'm buying. I'm just trying to mess around with the sound system so you guys can correct me or let me know how it sounds. I'm trying to sometimes I'm too loud, sometimes I'm a little too quiet. So I'm just trying to adjust the settings. But I have 3 dividend stocks that I'm buying today. I'm messing around with my M1 Finance. Of course, I like the high yield and dividend growth hybrid slash stocks, but I do love high yield dividend stocks like Arbor Realty Trust. I'm going to reveal to you one of them I'm buying today, and just some thoughts a little bit on TSLY I'm going to add to the end. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these 3 dividend stocks out right now. So I needed to add a little bit more shares to these guys. Kinder Morgan has a dividend yield of 6.63%, a PE ratio of 15.08, average volume 13.26 million. The market cap is 38.19 billion US dollars. Its year range is 1592 to 1936. Previous close is 1703. So what do I like about these guys? Let's check this out. So this is one thing. With approximately 70,000 miles of natural gas pipelines, they own an interest or operate in the largest natural gas network in North America. So Kinder Morgan is one of the largest energy infrastructures in North America. They have an interest or operate approximately 82,000 miles of pipelines and 140 terminals. Their pipeline transports natural gas, gasoline, crude oil, carbon dioxide, and more. Their terminals store and handle renewable fuels, petroleum products, chemicals, vegetable oils, and other products. So that's one thing that's very attractive about these guys. And I'm going to show you their revenue, and dividend history. So here's one thing that's attractive. So just showing the revenue trends right here on revenue chart, it is in an upswing, which is good. Nice market cap, 10,525 employees, and I like the revenue growth of 19.77%. So let's go to market trends. So here's our revenue annually in millions US dollars. So there's an increase in revenue. I like it. Usually it increases with the board of directors' confidence in hiking dividends. So 2016 annually 13,058, 2017 13,705, 2018 14,144, 2019 13,209. 2020, a little bit of a dip. Blame the pandemic, 11,700. 2021, 16,610. And 2022, 19,200. Huge increase in revenue. Now let's go over the dividend history. These guys started to make a huge comeback. Look at this. 2016, 13 cents. 2018, 20 cents. 2019, 25 cents. 2020, 26 cents. 2021, 27 cents. 2022, 28 cents. So their payout ratio is a little bit high. I'm not too concerned. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 7.30%. So if you bought 1 share, you made 6.63% with a annual dividend yield. So the thing is, these guys are increasing their revenue and things are looking pretty strong with these guys based on some fundamentals. So I bought them. So I just want to let you know. Now let's jump to the next dividend stock. Another one is U.S. Bancorp that I've been buying. So the dividend yield is 5.74%, a PE ratio of 8.93, the average volume 15.77 million. This is a huge regional bank. Market cap is 51.28 billion US dollars. Its year range is 27.27 to 49.25. Huge dip. Previous close is 33.45. So let's go over the revenue and dividend history. I'm waiting for this coffee to kick in, starting to get there, but not yet. So annually in millions of US dollars, these guys are doing pretty well. 2016, 22,000, 2017, 23,000, 2018, 25,000, 2019, 27,325, 2020, a little bit of a dip because of the pandemic. 2020, 2021, you can blame a few issues. 25,241, 2021, 23,714, 2022, 27,401. So that's pretty good. Now let's check out their dividend history. So here's a nice thing with their dividend growth. Check this out. 2015, 26 cents. 2016, 28 cents. 2017, 30 cents. 2018, 37 cents. 2019, 42 cents. 2021, 46 cents, 2022, 48 cents. So their payout ratio is 41%. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years is 7.47%. So if you bought one share, you made 192 with a 5.74% dividend yield. That's pretty attractive. Now let's jump to the final dividend stock, and I'll talk about, or discuss, TSLY. So Wendy's is a dividend stock that I've been praising and I've been buying. These guys have struggled a little bit against the S&P. They hiked their dividend. I'll go over some recent news too. They're sitting at 22.47. The dividend yield is 4.45%. A PE ratio of 26.88. Average volume 2.97 million. The market cap is 4.74 billion US dollars. Year range is 1757 to 2390, and its previous close is 22.47. So what excites me about these guys? Let's check this out. So as of right now, on their website, there are more than 6,500 Wendy's restaurants currently in operation in the United States and 29 countries in the U.S. territories worldwide. New market expansion and further development within existing markets will continue to be dominant drivers of Wendy's worldwide strategy over the coming years. Ultimately, we believe that the earnings generated from the international markets will be a significant component of our ability to generate long-term value for our stockholders. With our superior high-quality ingredients, unique menu offerings, contemporary restaurant designs, and flexible approach to developing new markets, we believe that Wendy's is meaningfully differentiated and well positioned for future growth. I'm going to show you one more article. Also on their website, 2022 has been a milestone for the year for Wendy's brand, and we have not seen a global growth this accelerated in nearly 20 years. We're on a journey to become a brand of global significance, and our priorities and roadmap to aggressively grow in our footprint in the United States across and international markets are clear. To expand globally, they must continue to supercharge the new franchise, recruiting key growth areas amongst underrepresented groups, unlock incremental traditional growth by leaning on their restaurant development incentive programs and new existing franchises with innovative new designs and asset types, expand via traditional development, including military bases with creative assets such as their Frosty cart. I'm excited to see what we'll accomplish together with our teams and franchises over the next few years as we reach our goal of 8,000 to 8,500 restaurants by the end of 2025. We have a bright future ahead, and I would like to thank Wendy's family members for the progress we made this year to accelerate global growth. So there's a few things. So they expanded in Mexico. They celebrated their opening of Wendy's 7,000th restaurant. So they're just getting bigger and bigger. So that's the one thing that I find very exciting. So here's another thing. We shared our intention to recruit new master franchises and build upon Wendy's restaurants in Ireland, Australia, and Spain. We can't wait to create a new Wendy's fans in these markets. After returning to the United Kingdom in the summer of 2021, we kept momentum going this year and opened the company restaurants in Brighton, Camden, Ilford, Kingston, Maidstone, Sutton, and Uxbridge. We also welcomed Square Burgers Limited to the Wendy's family, the first franchise partner to open a traditional Wendy's restaurant in the UK. So they're getting bigger and stronger, and they're growing fast at a fast rate, which excites me. Now let's check out their revenue and dividend history. And here's their revenue. This is annually in millions US dollars. 2016, 1,435. 2017, 1,223. 2018, 1,589. 2019, 1,709. 2020, 1,733. 2021, 1,896. And 2022, 2,095. The revenue from 2016 to 2022 has grown a lot. I'm not going to say exponentially, but it is getting up there. And it's growing fast. And they're expanding fast. Now let's check out their dividend history. What excites me the most is these guys were in a rut and they just started growing like crazy. 2015 dividend, 6 cents, to 7 cents, to 9 cents, to 10 cents, to 12 cents. Dividend cut because of the pandemic. Then 7 cents, 9 cents, 10 cents, 12 cents, 13 cents, and they jumped to 25 cents. Now they do have a pay out ratio according to Zacks, it's high. But with their expansion in revenue and their dividend growth in the past 5 years, I feel very excited for these guys, and I'm going to continue to buy. Of course, I have a disclaimer at the end, but these 3 dividend stocks have really turbocharged my dividend portfolio I can barely even talk. I'm like choking on my coffee right now. But a dividend yield of 4.45%. And if you bought one share, you made $1. So I like this expansion opportunity. I like the growth of these guys. These guys have been in big advertisements, specifically college football. They've been really putting their name out there. So that's exciting. I always see the cars busy in the parking lots, which is good, and the drive-through. So this brings my confidence. It's like Starbucks. Starbucks is always busy. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to squeeze in a video for you guys tomorrow, and I'm going to discuss one quick thing on TSLY. So depending on how TSLY does, I've considered, and I'm on NASDAQ.com, I'm considering if these guys are consistent in the 80 cents and 90 cents for 5 months. Now I am loading up in these guys just to see what happens on E-Trade. If I can get to maybe 600 a month with TSLY, then I'll throw it in KLIP and then really see something go crazy. And that way I can use both of their dividend incomes to buy the other cover call ETFs and then start using a domino effect. But to really turbocharge my M1 finance, I have also considered buying TSLY ETF on M1 finance and really using its income to buy the other dividend stocks. This is a very aggressive approach, but if I start seeing 90 cents, 80 cents consistently, and it's not a guarantee, this is a huge risk, I may throw them in M1 Finance so I can have them buy my dividend growth stocks and potentially use this to turbocharge my dividend portfolio. This is the only way I will buy TSLY. I'm not going to use it for, monthly dividends or passive income. I'm going to use its income to buy other stocks and go from there. But, the dividend growth is not, it's not going to be consistent. It's like QYLD. It's just strictly for income. It's not going to jump up in price per share and beat the S&P or beat Tesla stock. Understand the way it runs, but I just wanted to bring that up. Now, let's jump to my disclaimer, and you guys have a good one. As a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing, and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.